Alrighty, Doc here from North America. Good morning, good afternoon, and good evening. Definitely, I guess you could say there's repercussions going on slowly and steadily about what Mr. Powell said yesterday. And if I, at the same time, money is trying to look forward. It's trying to go forward. It's trying to make that distinction between what could be and what will be. That's I know that sounds kind of like what the hell's he talking about, but the election is the first primary is less than 4 months away, and money likes to anticipate what's going on, and that's exactly what it's doing at this moment in time. So they know that there's a good chance that this administration is going to be gone, and these policies are going to be gone, and so money is trying to find a good place to go, for a return. And that's usually the way it works. It's they try to find a new a place to go where it seems to make sense, and it's right, the whole bit. So that's pretty much the name of the game. Let me just check the sound here to make sure it's sounding right. Yep. Yep, there you go. Good. I'm just double check the sound. And so that's where we stand. And so you can see there the dollar index. We have it up on J4X. You can see the new platform that we're beta testing at this point on the screen. And you can also see it with that strength there. And you can see that we been in a buy. We slid into a sell a couple days ago and then back into the buy again. And, it just keeps on, this constant attempt to try to take it down and then take it back up again. That's pretty much what it all comes down to. Money would like to run away from the dollar, but there's no other, unfortunately, for the rest of the world. And hey, George, how you doing? Silver down over 2.5. I know. And you just see that crazy exchange pop yesterday. They popped the product. Let me just show you. I had to go check the exchange data. I was shaking my head. I was like, what is this all about? Let's see if it's reflecting it on this platform again now. Didn't see it on the silver on this platform at the moment, but let me just double check it. Yeah, see, there it is right there. Look at the pop that they gave it yesterday. They drove it up into the 60s or 70s or something like that. I think it was the 80s, actually. I have it over here. Let me just put it over here. Right there. And let's go over to there. There's the silver. You see they popped it up into the 80. It settled. I have a settlement of something like 83 last night, and then they knocked it down again. And you can see there it's pressing underneath the zero line. And let's see what Ducascopy has up on there too. Now we're looking at spot when we look at Ducascopies, whereas we're looking at a futures contract here. Let's just check it out. There it is right there. And yeah, see it's got that pop also. Let me see if we can turn this off for a second. The Hinky Atskis. Yeah, see they drove it up. Now this could be, this is just spot. This is not with the premium of the futures contract. And so, but they're both heading south at the moment. The futures contract is at 23.19, and spot at the moment is 22.93. And gold is the same way. Let me just show you how gold looks. Same situation. They popped it up big. And over here, gold, same situation. Where's it at? Right there. Popped it up and then drove it down. And let me just double check. The exchanges have reflected this. Now I'm wondering, are they going to straighten it out? Those trades didn't exist. But so far, they are still there. Let me see if I can find it on the exchange again. I went through it this morning and I had to readjust for the wild numbers at the end of the day there last night, or, at the end of the situation. Now, let me just go to the exchange and see if they're still holding those strange closes in their official prices. And for gold, yeah. They're still reflecting those prices. Now, they may adjust them as time goes on. Well, we've talked about this. These black pools are vicious. They drive everything crazy. But I have a settlement of silver last night in a futures contract of 23.83.6. So basically, $23.84, basically, rounding it out. And then, now they're slamming them down. And, there's pressure on it. Look, there's all kinds of stories. Just all kinds of, I'm here, the stories that I trust. There's all kinds. Hey, Robin, how you doing? Oh, I like that Chicago thing you sent over. That was interesting to see. There's all kinds of stuff going on. They're talking that they're going to crush the GDP. The gross domestic product is going to fall dramatically. And so they were projecting 6%. Now they're projecting 4.3%. I keep on expecting for it to get down to 1.5%, or 2.25% or 2.5%, something like that. That's kind of interesting. There was, just the way they documented it all, So, but yeah, I'm expecting to see GDP drop. You can see the stock market is trying to sell off. Let's just go over to the stock market since we're really jumping away from the dollar at the moment. The dollar is at the highs of the last, 6 months, something like that. But there's the stock market. It's just drifting down, down, and down. Now the low on the S&P 500 is 4,403. When we go to the daily chart, let's just go over to it real quick again, like so. Wrong one. That's crude. There's the daily chart right there. You can see it's really close. The low here was 4,397.75, basically 398. I got to assume that they're going to try to take that out. And they got to this low here. The low there was 12. And today's low is 325. So they're lightening up. They're getting a little concerned, and they're backing away from all the action that's going on. And they're, if there was ever time, I thought about it yesterday and today. If there was ever any time to put on insurance, it is now. It's the, sell the calls against your stocks, buy the puts with the premium, and sit back and just watch and collect the dividends. That's the way we look at hedging things around here. And so that is really what's going on at this point in time, is that there's a lot of, it's not down 500. Maybe it'll get down 500 or 600 on the Dow, that type of thing. There may be some good selling. But money is going to look at this as an opportunity to get in. And they're not buying for the next month or the next 3 months. They're buying for the next 6 months to a year. Just like when we saw some of the other stocks start to pop. And every time it tries to pop, we get longs who need to sell. Remember, hedge funds and funds in general, retirement funds and everybody else, are not exactly outperforming the market. They've been losing compared to the market. Someone was saying this morning, how do you rationalize this? The Nasdaq is up over 30% for the year. So why? You would think somebody wants to take some profit somewhere. With less than 3 months to go. So it's just like that. So that is the. That is where we're at, and it is something to see. It really is. I don't know if there's much more to be said about it, but things are getting weirder, and those crazy closing prices in the metals complex is really strange. And I don't know if they'll change them by tomorrow or what, but right now whatever the exchange reflects in the end is what we show. And so at this point in time, the Russell 2000 has been backing off. We're seeing speculative money having a problem, getting into the upper areas. So, there you go. No, they didn't. I was going to say, did they make a new low? I don't think they did. It's not 0325 still. Yeah, it's still 0325. And we have, 21? We have 51 minutes to the open market. So it's going to be a real horse race today. It seems like money wants to get out somewhere. Maybe foreigners have been selling their stocks, and they're going to have to liquidate them off the opening this morning. We'll see. Another sip of the tea there since I was talking so much. All right, so let's just go back to the dollar for a moment here. Let's see what the dollar looks like. Just one moment. Let's finish it off. So there's the dollar index. Here's the dollar index here. There we are. And as you can see, we're at the highs. And that high could be as much as, what is that? That is 05. The last time we were this high up was in March. Nope, not March. You know, it could be all the way back like 9 months. I think we looked at it. Let's just take a look at it again on J4X. There we go, right there. We'll take a look at it on J4X. So this is March of yeah. See there, they made a high of 105.84. 85. I'm sorry, 105, 105.85.4. And so today's high is 105. Well, they're saying the high today is 106.40. And that says the high there is 105.71. So we may have already made that high. We've broken a, what's that, a 9 month high or something like that, 8 month high. So we're seeing some real action. And November is where the all-time highs were. October and November of last year, right there. There are all-time highs right there, to 114.72. So there's a lot of, I was having a conversation with one trader this morning on the phone and said, we're the only game in town. I say it over and over. People kind of laugh at that, but that's the fact of life. I mean, where do you go? Where do you put equity in any size? What they've done is they've created so much equity. What is this all about? Why am I having a problem here? Now, why am I not able to see all of this at the moment? There you go. Okay. Yeah, so there's the dollar index. And it keeps on reaching up. There's the weekly, and there's the all-time high there. And it seems like we're challenging the last high back in February. Is that February? Yeah, that's February. So we're going after the February high. So it's like, what is that? That's like 8 month highs, 7 month highs. February, March, April, May, June, July, August, September. Yeah, it's like 8 month highs. And looking further back in September of, is that 22? We're looking at all-time highs up into the 114s. A lot of pressure. A lot of pressure on the dollar on the upside. In other words, pairs trades are feeling the pain. The longs on the pairs trades to a great extent are losing. They're just losing. The money is running to the states here. So talk about confusion. Talk about I thought that the dollar, the world is, that's the problem. You get one side complaining about the dollar and how it's going to lose out, and the BRICS are going to do this and they're going to do that, and the end result is there's no one out there saying, geez, look how well the European Union's doing, or look how great China's currency is trading. Or you don't get that. That's the problem. You only get complaints. What do they say? The squeaky wheel gets the grease. I guess that's what it comes down to. So that's where we stand with the currencies there. So let's go to the chat line again, see if anything's said in there. Nope. Get every day. Okay. All right. So from there, we will dart our way over to. Let's see. Let's go over and check out the euro. Let's see what the euro is up to. And there it is right there. We went into the sell yesterday. You can see it right there. There's the euro. Closed in the sell yesterday. Pressure's still on. What's changed from today to yesterday is that the Fed said the interest rates are going to be up at this level longer than expected. That's pretty much what it comes down to. Longer than it was expected. Okay? I've been saying that you're going to see 2 more quarter point increases and that the cuts next year won't come till, I don't know, August, if anything. At that point, it'll be very interesting to see where we're at. Well, by August, we're going to know who the 2 candidates are. The race will be in full form. There'll be a battle going on left and right, in the sense of every which side. Money constantly looks for a place to gain or be safe. It's one or the other at this point. Gain or be safe. So, and that is the action we're seeing. And not much more that can be said about it, except for that fact that it just isn't, it's not a simple pathway of action. That's what it comes down to. And again, Fed chairman has put, I guess, a wet blanket, as we could say, on the idea that interest rates are going to be, I think they were actually counting on 2 or 3 interest rate cuts going into next year, in the like February and March of next year, which is only 4.5, 5 months away. Well, those things are starting to get pushed out of the way now. People are going, no, this is not going to happen. So, all right. So there's the euro. We got it up on J4X. We've got it up on the old Chicago Quant. Let's take a look at it also in the form of on the new platform itself right there. And you can see the weekly very comfortably. It's still in the sell, just like it is right here. And right here. And right here in the euro. So the pressure overall still on the downside. You can see the long, slow, steady drive here all the way down. Same thing over here on J4X, all the way down. And the same thing over on the new platform right here, all the way down. All it does is glide, 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 and glide. So, all right, from there we'll put up cable. There is cable. And you see cable is, it's feeling that same pressure. And let's see if we can amplify this a little bit better because they're really pushing it down hard. So it's been in the sell for 2 solid days. And over here, it's, I guess it went into the buy there, and it's been 6 days in a sell. Let's grab one of these. Oh, let's just put one in. So it's been in the sell there. Let me see. And the weekly has been staying steadily down. Same as over here. Pressuring down. And right here. In the same situation, pressuring down. In the weekly, that's the weekly there. And then here's the daily. That thing's been marching south also. One little hiccup there, like there, where we went into the buy. I'm surprised that's not in there. Let's just grab this green one right here. Move it over. Right there, and then it slid right back into the sell again. And then let's amplify this to see that. It's like 1 week, 2 week, 3 weeks. Let's go back. What date is that? Let's go all the way back to 8/20 right here. So it was in a sell there for 4 days, and then went into the buy, and then back into the sell again. And it's basically reflecting 3 days in a sell at this point on the new platform here at Chicago Quant. These 3 days. All right. From the cable, we'll go over to the Swiss. Normally, we would expect to see the Swiss showing some real life on the sense of. Let's put up on J4X. Money running to Swiss, but so far it's not really running that fast at all. It's doing the other way around, and you'll be able to see here in a few seconds. It's been losing against the dollar. The dollar has been gaining against everybody. It just shows you how upside down this whole world is. And I saw a great article this morning about the BRICS, thinking that maybe they'll become a powerhouse in commodities, which is interesting. But it takes capitalism to really benefit from all that. And see, that's what the problem with the BRICS is pretty much they're all socialist countries or communist or dictatorships on some level. So that's what the problem is. And I guess you could say that the article said that basically is India is kind of trapped. It's kind of like in both camps. So they try to be a democratic process. They're more invested in the Western nations, and at the same time, they have the largest population in the world, and it looks like they have a great labor force, and they speak English, and all kinds of great attributes. They're part of the Commonwealth. So India is kind of trapped in one or the other. All right, now. What are we doing? We're going over to Swiss here, right there, and we got to put the Swiss up over on the old Chicago Quant platform that we still use. Look at that spike today. Woo! Right there. It's heading for the 90. It's in the 90s now. We've gone from 86 to 90. Talk about a shifting gears. Total shifting gears. Changing in velocity. And that weekly, look at the weekly. It doesn't even want to let go. The weekly is just hanging there. Constantly just pushing up, up, and up, and up. You can see it here too. Right there. The weekly has just been strong, strong, strong. It doesn't want to let go. And same thing over here on Chicago. That's CAD Swiss. Right there. What a spike, huh? Yeah, strange world. I had this conversation with a trader on the phone this morning, and I said, America is really like an island. We in the end, go to the basic fundamentals. Americans almost own 50% of America's debt. So the rest of the world shares the other 50%. So with 15 or say now we're in debt for 33 trillion. So 17 trillion is outside the United States. Where would you take $17 trillion if you sold U.S. bonds? What would you put 17 trillion into? And everybody knows over there, the dictators and the ones that are not running things right, they're running things wrong, or the socialists, they all know that if they got their hands on the 17 trillion, they'd put it back in dollars again. That's the problem. Because they wouldn't know where else to put it. So they'd have dollars sitting in bank accounts around the world, still in dollars, So the other 17 trillion is owned by Americans. So it's like, even if the world gives up in buying American bonds, we own half of them. And so then we might have to pull our money away from foreign countries to pay for that 17 trillion, Which then who gains from that? Obviously not the foreign countries. I mean, the level of talking about the facts in financial world nowadays is gone to a great extent. I mean, I listen to CNBC and CNN, Bloomberg and CNBC and a few of the others, and they just dodged the facts. I mean, literally dodged the facts, and they don't even have conversations about them. And like yesterday, one of the big traps that Chairman Powell did is from one channel that I follow, which is the business channel on of Fox Net of what's his name, Rudolph Murdoch, not the Fox News Network. They're separate companies. That one's owned by Disney, but the Fox Business Network is owned by Murdoch still in the Wall Street Journal. And their reporter, the business channel, actually asked the Powell, the only person in the whole room of people asking questions, asked how does he deal with the rise of oil and inflation, and how does he correlate that with inflation? And he basically denied that it had anything to do with it. Now, anybody out there listening to this right now knows that you're paying 50 or 60% more in oil than you did last year. Or 2 years ago or 3 years ago under Trump. Oil had gotten down. Gas oil, the fuel to the automobile, was in the $1.50 area. Now it's at $3 and almost $4 in the United States. Natural gas in Europe, you're paying $26 or $27 a cubic foot now, and you were paying like $4 and $5 and $3 a cubic foot. In the United States, we still pay only $2.70 or $2.80 a cubic foot. You're paying $26 or $27. And he turns around and tells that reporter that, we don't really follow inflation through oil and food. Well, guess what? We don't live if we don't have oil and food. We die. If we don't have those two ingredients, we're dead. We're in the ground, dead. And so the level of and can you imagine not one reporter out of that whole room asking questions did not ask that relationship at all. Zero. It was only the one channel that I pay attention to and I always recommend to listen to, and that is Maria Bartiromo and Larry Kudlow, Stuart Varney on the business channel of Fox, which is not Fox News. It's a separate corporation. So, it just the level goes on, and then I sit here. Let's put it this way: people will be able to listen to my videos, 10 and 20 years from now, and go, "Wow, this guy was right. He was in the right stuff." And then they'll go listen to financial news on other channels 10 or 15 years from now, and go, "They don't even talk about the things he's talking about. Why is he talking about things that they don't talk about?" It's because they're real and they mean something to the market. That's why. That's exactly what it comes down to. All right, where are we? We're at Swiss. Let's go over to the yen. Let's see. I think yen was through the 48 yesterday, so I can't wait to see it today. Where are you, yen? There it is. Yeah. Okay. So no, it's just hanging underneath the 48. It's still having it's still battling that situation. Yeah, so it did make a new high today. Today's high now is 148.46. Yesterday's high was 148.36. So they've lifted up a little bit more. There's more strength in it. We've been saying, that we think it's going to try to get near 149 or 50. It has that feel to it, like that's what it's trying to do. And it just it's consistent, just solidly consistent. And there's that spike right there. It spiked up, not like the way the Swiss did, but it's up firm, and now it's a little bit lower than what it was yesterday. It looks like a settlement yesterday of the settlement yesterday was 148.34, almost right off the edge of the highs. And so they made new highs and then backed off a little bit. I'm a little surprised, but that's okay with me, Anything to keep it a little bit smoother for the Swiss itself. And there it is right there. Dollar yen. You can see right there, just sitting on the edge of 148 with that pressure, just pushing and pushing and pushing. You can see that high of 148, 45, almost 46. We're at 147.94. So now this is definitely fascinating the way this has been playing out. All right, now from there we're going to go see what the Turkish lira is doing. Right there's Euro Turkish lira. Still hanging around underneath the 29. No big spike today. They knocked it down and then now it's back up again. Fourth day in a daily buy. Second week in a weekly buy. Let's put it up over on J4X. Right there. Okay, so at this point, let's see, and what else do we have here? Let's go find it on the new platform just to get a flavor of what's going on there. There it is right there. And there's the Euro Turkish lira. You can see the last 2 days. Oh, you can't see that. Let's put that on the screen here for you. There it is right there. You see that strength. And you see the weekly, we're on a second week of a weekly buy. And you can see the daily is, just pushing along, trying to get long. What is that? It looks like 2 days in a long at this point. So let's just emphasize that like that. Yeah, so that's yesterday. And today is up the same area. So, and then over on J4X, you can see today's turning red. And it was green for 3 days. So it's just a constant war going on here with that product. I'll tell you, it's going to be interesting. Will they have to go to 37%? Will they have, what will they have to do to hold that currency up? A Western nation like that, or industrialized society with 25% interest rates. Whew. I don't understand the strategy by the former prime minister, now president, Erdogan, but whatever it is, it's definitely not doing what I think would be normal. That's for sure. All right, and then from there, what do we got here? Let's see where it is. There it is, right there. And what we're looking at here now is the way it's rolling at this point is we're not seeing anything but that odd, steady weakness of the. Let's put it this way: there's where they raised the rates from 12.5% to 25%. Right? Oh, you can't see that. Let's do that again. Right there. Same thing here. That's where they did it. And all it's done is got itself back to where it's a little underneath, It's basically hanging the lows of those days. So if it took 12.5% increase in interest rates, doubling them basically, I don't know what the next story or shoe will be, or concept, or drive. I don't know how even to express it. I can't even express it. It's going to have to do something, that's for sure. All right, now. All right, so there it is right there. Here is the, this is the South African Rand, which is the #1 brick, and you can see the weekly is trying to break underneath. At the same time, we've seen gold and everything do some really strange stuff. Look at that. There's that big spike yesterday, I guess you could say. That's a pretty good spike, when you really look at the action. With the way gold, let's just go back to gold real quick, and we're going to put the Rand up on J4X. There it is right there. And look at that swing. So that was that spike you saw on the currency. Let's put it up on J4X. Let's see, where's it at? There it is right there. There's that big spike there too. Um, you know, I don't even think I can. I'm trying to figure out what to say about the metals complex. I mean, interest rates are rising. That hurts the price of metals. At the same time, inflation is staying firm and steady on the upside and gaining against things. They're not losing. It was funny. The administration here walked around telling us how inflation is dying back down again. It's all okay, and in fact, what it is, it's still double it's double. The inflation is double, literally double than what it was when he took office, and it went flying up to almost 10%, and it's hanging in the fours basically now. And so, it's still 4% inflation. No matter what, it's not like 1.5% inflation like we had before he was president. So, it's a real confusion what metals are going to do. Matter of fact, that odd spike in gold right there, and that odd spike in silver right there, and I think even platinum at one point was running like that yesterday. No, and then now you can see it's pressing down into a sell, and the weekly is getting very close also. But I thought it was higher at one point in the platinum. Let me just double check the exchange again on the platinum. Let's see. Yeah, so it was the day before it was that spike. Yeah, they're talking about the treasuries. Oh, is it the 30-year? No, it's a 10-year. The 10-year is trading at 4.468. The 2-year is trading at 515. Let's just go over and check the bond, because I just heard somebody say that the bond vigilantes are raising their head up. Now, yesterday, they tried to lift it up. See, that's what's so strange about all of it, is that they spiked gold when they thought that the bond was straightening out, and then you can see it today. We're making new lows now. It was a real. I had that box up for that reason. I thought that it was like a reverse head and shoulders and it was trying to battle up. Now it's taking it out. We can get rid of that box because today they've gotten rid of it. And you can see here we had a circle going on for a couple days. Today's what, Thursday, right? So we had a circle for 3 days. Looked like it was going to close in that weekly buy, and it has tried and tried and tried, and now we're rolling over again. And like I said, the bond traders and the currency traders, they're not listed markets, so they can fly all over the place at really fast rates. There are no circuit breakers in those things. Yeah, they're talking about right now. That's what they're talking about. Interest rates are going to keep on rising more, even if it's a low rate, at a slow pace. Look, once Mr. Trump is back in office, the economy is going to be very healthy. Interest rates are going to be dropping, and oil and everything else is going to be dropping in price, and it's going to be totally a different economy. Right now, we have our socialists in power, and that's all they do. Luckily, the House of Representatives is not in socialist hands at the moment, so it has it all stalled out. Or they'd be doing insanity right now. It'd be literally insanity. Okay. Now, let's take a look at copper. We know that when we look at copper, we think of China. So okay, it made new lows here too. Starting to put more pressure on this product at the same time. And let's see what it looks like right here. And we'll leave the South having a RAN up there because we're going to go through the metals. As we go through all the metals, we leave the RAN up there just to remind everybody what's going on. And then here it is right here on our new platform that we're beta testing. You see that pressure that's going on right there. And look at that dip down. And it's been in the sell for a bunch of days. And what is it? 5 days now in a sell. 6 days in a sell. So we're 6 days in a sell at this point. Product's been really getting pushed down. And let's just take a quick look on here on the J4X. Right there. Yeah, there's 4 days in a sell right there. 3 to 4 either way. There, that is, let's see, 1, 2, 3, 4. Okay, so right there, that's trading at, what's that? 52.4, 52.4, and this is trading at 51.2. So 3 days in a sell. This is the third day, and that's one interesting March. Now, we did take a quick peek at platinum. I'm going to do it again. There it is right there. It's pushing into the sell, and we are on the edge of the weekly at the same time. And so that really reflects the pressure on the overall market. If they get that thing into a weekly sell by tomorrow, then it's going to be really even more of an issue. And let's go back to gold and silver. I think both of them are in weekly sells, right? No, I think they're in weekly buys. Yeah, so gold's been in a weekly buy for 2 weeks. Silver, weekly buy for 2 weeks, and they're holding up. So, maybe this is the time of year where they usually buy these things, but with interest rates reflecting strength, in other words, interest rates going up, it's making it very hard for them to accumulate metals. All right, from there, we move over to the energy sector. Let's go check out the energy sector. And we're going to put Brent up on J4X. And it's falling down from 97 or 98 down to, where's that now, 94. Not that much of a slide. And over here, let's see, where's that? Right there. And put the crude oil contract up there. There it is right there, November oil. And as you can see there, trying to lift up at the moment. It's been in the sell for 2 days. And let's just check out what's going on over here. There it is right there. As you can see there, it is trying to bounce. It's 3 days in a sell. You can see it's moving up. It's trading at 90.35. I think what's the high here now? I think the high is 3 days ago at 92.03. We're only $1.70 off from the high, so that's not exactly anything to be terrified about. What's up with this thing? There you go. Not there. Not there. I heard a ding. I'm just trying to figure out who's dinging me. All right. So, there's Brent on the left. There is crude oil, West Texas Intermediate crude on the right. The pressure is on, but the weekly is holding up in there. It's not letting go. Let's see what the weekly looks like on J4X. Right there. And what we do is we usually look at the Canadian dollar, when we're looking at the energy sector. So let's throw the Canadian up on the screen here. Dollar CAD right there. And it's been heading, this is the weekly. It's in a weekly sell for a second week. And on the daily basis, you'll see a nice glide down. It's been like a bunch of days. Okay, so they're trying to lift it back up as we speak here. So it's been gaining against the dollar for like 8-9 days. Let's just put it up on the screen here. And that usually correlates with the, where is it at? There it is. It usually correlates with, oh, look at that. On our work there, it's actually through the zero line, trying to get into a buy. Do I have CAD on our platform? Let's see. CAD. Looking for the CAD. There it is right there. Now we're not getting a decent data feed, just that it's lifting up. And it's been in a weekly sell for a couple of weeks here on that. Let's just show you that. See that? So it's the second week of a weekly sell. Let's see what it looks like on J4X. Right there. Yeah, second week in a sell. And let's just keep the daily up there and right there. And then over here on the Chicago Quant platform, flirting with the weekly sell as we speak. So it's making a dive to it. That's usually bullish for energy, you know, and obviously we're, like I said, we're only $1.70 off of the I don't know, what is it, the 20-year, you know, I guess it's like a 2-year high or something like that. So we're definitely chasing after it, that's for sure. All right, now from there we go over to, we'll leave CAD up on J4X just to remind everybody how it's turning around. And let's put up over here, we'll take a look at, where's it at? Right there. There we go. And right there, we'll put that up there. And let's take a look at, there's the crude oil. Again, trading at 90.26, just a few cents off. And let's check it out over here. Where's that at? Right there. Now it's been in a sell for a couple of days, just like, you know, that's West Texas Intermediate. And you can see that same spike going on in there. And you can see the weekly is not letting go. It's still staying strong. Now, I just want to go see what the back month looks like. So let's look at the January contract. So if this is trading at basically, oh, now it's at $9.40, $90.40. And so we're talking about $8.87.60. That's $2.40. That's $2.80 premium. They're really reaching for delivery. You know, they need that inventory. And this is the November contract. So the October contract is expired. So we're looking at the November contract right now, which has 30 days of life in it, and they're carrying a $2.80 premium in it. That is pretty wild. All right, now over here we go to natural gas right there, and natural gas was selling down this morning, still is. It's still in that weekly sell there. Let's see, natural gas right there, and as you can see, it wasn't a daily buy for 2 days, right? 3 days at this point, and it's in the weekly buy for 1 full week, going on a second week. Interesting. Now let's see what it looks like on J4X real quick. Natural gas. There it is right there. Natural gas. You can see it's trying to go into the sell just like here. Let's see what the weekly looks like. There's the weekly right there. And so it's trying to go into a weekly buy. That's what it's trying to do. And it's at 49 in the fast, and it's at 46 in the slow. So it's definitely getting pressured on the upside there. And then from there, we go over to that what do you call it? Spanish energy company. You can see that right here. We're 4th week in a buy. And we're in, 3 weeks in a daily buy, steadily, and look at that. They're throwing a big pressure point on the stock this morning. Let's put it up on the screen. It's probably trading in the $26 area at this point, like $26.80 or something like that. Where's it at? Down in here, right there. No, 27.08. It was at like 27. 70 something yesterday, so they're taking some punch into it at the moment, and so that's the natural gas action that we're seeing over there. and Europe is feeling the pain more than anything else compared to the rest of the world. I imagine they'll have this all figured out within another year. I mean, it's kind of crazy. Just the way money's being thrown in the wrong direction. Unproductive money becomes wasted in the end. It has to be used right, or it's not going to cut inflation or do anything else. All right, so from here, that's the energies. Let's go take a look at the stock market. I see if they remember 0325 was the low, and you can see it's trying to bounce up in here. There's the 0325. It still hasn't broken it. There was 05 even. Now they've just started a whole new bar, and it's slowly drifting down, or it's basically unchanged and bouncing up a little bit. You can see our work has been in a sell since the 44.90 area. So it dropped almost 85 points since we've been in the sell. And it doesn't look like they're getting this product, moving any better than what it was before. Let's put it that way. Everywhere we turn, we find that the product is, the stock market itself is confused. They know that things are wrong. They know growth is not here, and at the same time, Mr. Trump is enormously ahead in the polls against everybody, and he's beating Joe Biden by 11 or 12%. And it's like, we all know that he's if he even gets close to half of a fair election, he's going to win. And so it's going to be very interesting, and the economy is going to turn, and it'll all be for the better. Well, what else have we got going on here? Let me think now. So that's the stock market, and yeah. All right. Guess does anybody care? I haven't seen any questions. If no one cares, we're going to start to shut down. I guess I got to come up with a title today. What can we call this market? Honestly, yesterday was like, Fed speak, and today I'm not. What to call this today is a confusion in its own right. So what we're really looking at here is, a market that's, selling short term, looking to buy long term. I think that's exactly what we're looking at in every direction. Pairs trades, stock market. Energies is the opposite side of that. Short-term long long-term short. They want to be lower. So, in other words, happier days, better economy, everything else is coming around the corner. It's just a matter of time. And until the markets don't see that, we're going to stay steady. This is a nice sell-off we saw in the stock market. The S&P 500 dropping from the 4,500 down to basically 4,400 over one day from Mr. Powell. So that is really the next, I guess you could say the next shoe to drop is that markets are, and I think that's what our title is going to be. We're going to call it markets are looking short, selling short term. Markets sell short term, buy long term. I think that's really what it is. All right, traders, this is Doc. Tomorrow is TGIF. Thank goodness it's the end of the week. And TGIW. Thank goodness it's end of week. Yes, or thank goodness it's Friday. So, all I have to say is, happy trails to you until we meet again. Happy trails to you, to all our trading friends. Later, traders.